Central Bank of Nigeria to start commodity exchange in 90 days. Afreximbank disburses $250 million to Trans-Niger Oil and Gas. IMF revises down Nigeria's 2021 growth forecast by 0.2%. Plus, oil steady as supply cuts offset demand worries on stalled vaccine rollout. Details of this and more on Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at this time. The Central Bank of Nigeria says it plans to obtain all the necessary approvals required to start the operations of a proposed commodities exchange within the next 90 days. Governor Godwin Emefiele, who stated this, said in the next 90 days, the first launch will begin and will involve approvals on repositioning, restructuring, setting up bureaus, board structures, board committees, and governance committees. The central bank obtained approval from President Muhammadu Buhari to restructure and reposition Nigeria Exchange to stabilize food prices in the West African nation. The central bank and partners are looking to invest at least 50 billion naira to build the infrastructure needed for the exchange, according to the governor. The federal government is set to provide incentives and technical support to states willing to invest in the agro-allied industry in the country. The government is also wooing industrialists to invest in the textile, sugar, and rural infrastructure in any part of the country. Minister of Agriculture and Rural Development Mohammed Sabo Nenuno stated this while inspecting federal and Nasarawa state projects in the state. Musa Baba Aliyu reports.
History has it that agro-allied industries have contributed largely to the socio-economic development of Nigeria in the 70s, 80s and late 90s. In those days, crime and rural urban migration were low as youth were engaged all year round. Minister of Agriculture Mohammed Sabo Nenuno attributes youth restiveness being experienced in the country to the collapse of the industries.
You can almost correlate the level of crime in most of our states that have textile with the collapse of the textile industry, like Kaduna, like Lagos, like Onitsha, Aba, and the rest.
And this is why the minister is in Nasarawa State to get the buy-in of the state governor on the need to invest more in agriculture, especially in the area of processing. The discussion between the minister and the state governor, Abdullahi Sule, is indicative that the two share the same view on some issues.
Agriculture is the backbone of the economy of Nigeria, and it can sustain Nigeria. And for us in Nasarawa State, we strongly believe it can sustain Nasarawa State.
The state government is already partnering with some industrialists for the construction of a large sugar production factory in the state. 68,000 hectares of sugarcane fields have already been established for the actualization of the project.
By the time this is finished, the others that are on the pipeline are finished, then there is no question of deficit in sugar production in this country.
There is also ongoing investment in the rice production and processing. This mini rice milling machine was donated by the Japan International Cooperation Agency through the federal government and activated by the Abdullahi Sule administration. The minister is in this small community which houses this local rice processing center with more than 3,000 workers, promising to develop the area under the Rural Development Program.
African Export-Import Bank has disbursed a $250 million credit to TransNiger Oil and Gas to enable the company acquire 45% stake in oil mining lease 17 onshore oil field, but the NNPC holds 55% equity in OML 17. The Afreximbank president Benedicto Ramos said the transaction further underscores the bank's commitment to ensuring that indigenous African companies were able to play a more dominant role in the operations of specialized oil and gas assets in an industry dominated by international oil companies. The total support package from Afreximbank is $1.1 billion. Oil prices were mixed on Friday as a pending supply cut by Saudi Arabia and lower U.S. oil stocks helped counter risks of slowing fuel demand due to stalled vaccine rollouts and contagious new coronavirus strains. U.S. West Texas Intermediate crude futures slipped 3 cents to $52.31 a barrel after falling 1.0% on Thursday. Brent crude futures for March rose 14 cents to $55.67 a barrel after falling 0.5% in the previous session. The Brent March contract expires on Friday, and the more active April contract rose 11 cents to $55.21. Gold prices were steady on Friday as investors waited for developments around a U.S. stimulus package, although the metal was on course to post a weekly and monthly decline, hurt by a stronger dollar. Conversations on mobilizing support for recovery of developing economies from the impact of COVID-19 is taking center stage at the World Economic Forum. United Nations Deputy Secretary General Amina Mohamed said investments for increased availability of COVID-19 vaccines should be intensified through public and private sector collaborations.
Sharing here during this response on the finance side and on the vaccine. Vaccines will open up the economy, but more importantly, how we find the liquidity and the fiscal gaps filled by a global response on finance. And that's really a G7, G20 issue that needs to happen now so that we can encourage that leapfrogging into a green transition, creating the jobs and making sure that those energy transitions become a reality and not just an aspiration.
Still on the global scene, the International Monetary Fund IMF has revised its growth forecast for the Nigerian economy in 2021 to 1.5% from its earlier projection of 1.7%. The IMF made the new projection known in its World Economic Outlook update recently released. The new growth projection is 0.2% lower than the multilateral institution's 2021 forecast made public last year. The IMF, however, projected that in sub-Saharan Africa, growth will strengthen to 3.2%. It also adds that even though the recent vaccine approvals have raised hopes of a turnaround in the pandemic later this year, renewed waves and new variants of the virus pose concerns for the outlook. Well, to further shed light on implications and benefits of the World Economic Outlook, recently released by IMF with reference to sub-Saharan Africa and Nigeria in particular, is an economist, Tefa Abraham, who joins us via Zoom. You are welcome to Business Express, Dr. Tefa.
Thank you very much, Benny. It's my pleasure to be here again. Thank you.
Yeah, good to have you. Well, straight up, 5.4% GDP growth for the world. Isn't that ambitious?
Yeah, well, certainly it's not ambitious because every country every continent, every economy right now is all about tackling COVID-19 as a means of achieving economic recovery. Because the sooner every country cooperates to tackle this scourge of COVID-19 that dragged us into economic recession, the better it will be for our economic recovery. So the revision to the 5.1% global outlook for growth is certainly within positive range because it is anchored on opening up countries to taking the vaccines, keeping COVID-19 away, opening the economy, and then we'll see recovery pick up.
Okay, doctor, every country's hand is on the recovery gear with 1.5% GDP growth projection. In the case of Nigeria, does it mean that the federal government's recovery effort is on the right track?
Yes, certainly the federal government economic recovery effort is on the right track. And if you follow the debate from the Monetary Policy Committee in the meetings that held 3 to 4 days ago, you will see that even the Apex Bank is in this conflict of whether to remain on the course of keeping prices, achieving price stability, that is tackling inflation, or continuing its support for government fiscal programs to achieve faster economic growth through CBN interventions. So it's definitely a course in the right direction, provided the government will continue to harness its monetary policies with fiscal measures.
Okay, Dr. Abraham, the hope of recovery is centered on the fair and equitable distribution of vaccines around the globe. Distribution of such vaccines have not started in Nigeria yet. How soon then is it feasible, considering this distribution yet to commence in the country?
Every country will have to have a demand model of which of the vaccines to order, to place demand for. Because the global supply market for vaccines ranges from Europe to America to India and all of those countries. Nigerian scientists will have to be in the decision-making process of which vaccine to go for Nigeria. Vaccine that will be sensitive to our weather and climate and the differences in our geopolitical zone in terms of alterations. So the choice of vaccine should be a medical one. It should be a choice that is coming from medical practitioners, pharmacists, laboratory scientists, but more importantly, something that is sensitive to our own unique climate and environmental challenges, having in mind our own kind of body and biological system. So for once, the choice for the demand of which vaccine Nigeria should go for should be allowed to be a medical decision, something that people in the science field will drive the demand process. So certainly, I look forward to Nigeria certainly has a plan about what to do to get vaccines to its wonderful citizens. The federal government certainly will not put out everything out there about how they are going, about how they intend to make the choice. But certainly, I believe there's a lot of effort from this administration to get the vaccine to the people.
Okay, doctor, away from the vaccines, let's leave that for the medical experts. Let's talk economics. Recent report shows decline in foreign direct investment worldwide. Does investment have any place in attaining this projected GDP growth that we are seeing?
Certainly, investment, both foreign and domestic, has a place in shaping the type of economic growth which we are looking forward to achieve. While a decline in foreign direct investment is not too pleasant for our external balance, we can do a lot to improve on the domestic investment side. And that is by a simple formula of all Nigerians buy Nigeria, consume Nigeria goods and services. When we do that, our spendings will be able to circulate within our economy, and through the multiplier effect process have a positive impact on our entire spendings. So certainly we'll feel the impact of foreign direct investment, especially on foreign reserve, and it will also affect in a way the stability of the equities market. But that will be something that will only go on for a short while. Provided global recovery is anchored on COVID-19 measures, I see foreign direct investment returning because because the government has already done a lot to improve the ease of doing business in Nigeria.
Okay, with that hope being raised, there is also optimism about the African Continental Free Trade that has kicked off. Is that enough avenue to leverage on?
Yes, the African Continental Free Trade is a good avenue to leverage on, Benny, like you rightly said. But it's important for Nigeria to understand that while we are going on with this African Continental Free Trade Agreement, we must understand that we cannot be bluntly closing our borders to the supply of other countries' goods. Because the way this thing works is that we sell, we buy, and they buy and we sell as well. Markets must be allowed to move freely as much as possible. Yes, government can check in terms of regulation through tariffs and things like that. But it's important to be very careful at this moment not to institute a price war or tariff war amongst our African neighbors that we have already agreed to trade with. So the best way to capitalize on this African Continental Free Trade Agreement is to step up the quality of our products while at the same time ensuring that they remain competitive out there. Tackling inflation will be important. Addressing infrastructural issues that are likely to increase the cost of producing goods in Nigeria will also be important. And electricity supply will also play a very strong role in that process.
Okay, aside this infrastructure which we are anticipating to be put in place to ease trade, there is this also concern. The NBS figures show food inflation is high. Won't it affect the planned economic recovery efforts by the federal government? Though we hear that the CBN is giving out 50 billion naira to support the commodity exchange. How far can all of that help?
CBN is a master, it's a professional institution, a hub of knowledge that has full control and autonomy to go about Nigeria's monetary policy. And one component that has been driving inflation generally is the food component. And sometimes they also add the transport component. So what the CBN has done is to study the components of inflation and to arrive at a very obvious finding that the food component is where the issue is. So by its intervention, they hope to tame the instability that is leading to increase in food prices. And as a result, that intervention is certainly a welcome one, because once you tame food inflation, then it will be possible to tame overall inflation.
Okay, current conversations ongoing globally is the energy transition thing. Is the volatility of oil price something to worry about, considering it's the mainstay of our economy?
Yes, energy is certainly the mainstay of our economy. But like President Muhammadu Buhari said once upon a time, we need to diversify away from oil, but we need oil money to diversify away from oil. So energy will keep driving global economy. But the question is, what type of energy? Nigeria's energy is still non-renewable. That is what is still driving our economy. What is driving modern cities, clean growth, is renewable energy. It's important we have a formula on how soon we're exiting non-renewable energy to renewable energy use. In the meantime, legislative framework to coordinate excess crude earnings will be very important so that we will not squander, as it were, resources that we are getting from our sale of crude oil and gas. Don't forget, there's also the issue of gas flaring and its environmental consequence. So while we are enjoying the benefit from oil revenue and the innovation from the energy sector, it's important we keep our energy use very clean, mindful of its development impact, and climate change effect as well.
Well, it's been projected that recovery should come first quarter of this year. I remember having you here in the studio. You were talking about the possibility of first quarter or second quarter. With all these projections from the IMF as well as the African Development Bank and all of that, where is your stand? Are you still on first quarter or second quarter or in between?
Well, first of all, I'm a full-bred Nigerian economist, and I am optimistic about our economy coming out of this recession as quick as possible. But I'm happy you record that since last year, when that projection came out, studying the figures, studying the trend, studying publications, studying, observing global economic trends, it became obvious to me that it's likely to be in the second quarter. And like I said, if you look at when we entered the recession in 2016, it took about that same period to come out of it. But this recession is not something that is determined strictly by economic variables interplaying each other, but it is one that is coming from a health shock, if I may, onto the economy section, onto the economy, if I beg your pardon. So right now, what you have, Benny, is economists and health economists debating, should we mind health or mind economy? And me, I would say, provided we are still gambling between lockdown and no lockdown, our economic recession will take some time. But as soon as we are all willing to comply with COVID-19 guidelines and the government step up its effort to put automatic body sprayers across the country, the way we used to have phone booths everywhere to make calls, government must make compliance to COVID-19 guidelines very easy, to something to just comply with automatically. So this our recovery, it certainly should come earlier, we pray, but the way the indices look right now in terms of inflation and even the reduction in projection by the IMF, I would still say it's most likely going to be in the second quarter.
Dr. Abraham Tefa, I agree with you that it has to be a balance between health and wealth. Thank you so very much for sharing your thoughts with us at this particular time.
Thank you so much. Thank you so much.
You're welcome. Well, moving on, the dollar remained on the back foot on Friday as an improvement in risk appetite sapped demand for the safest assets, with investors taking share from U.S. economic data wasn't as bad as feared. Well, on the capital market trading today, the session all share index advanced by 0.58% to settle at 42,412.66 basis points, which is a 0.1% difference from how the market closed yesterday. We can see the volume of stocks traded is 669.8 million in 6,663 deals. We see the value is 6.5 billion naira, which is to say investors gained 22.1 trillion naira. Well, moving on, the dollar remained on the back foot of Friday as an improvement in risk appetite sapped demand for safest asset. Bosede Ebel has got the global market.
European markets retreated early Friday as market jitters persist over a retail trading agitation that has rocked Wall Street. Most of the stocks started early trade mostly negative as DAX, FTSE and CAC depreciated. Stocks in Asia Pacific were lower in early Friday trade. Nikkei dropped 1.89%. The Shanghai Composite fell 0.63%, while the Hang Seng Index declined 0.94%. U.S. stock futures moved lower in early trading on Friday as Wall Street's volatile week continued. Dow futures fell 353 points, S&P 500 futures and Nasdaq 100 futures also traded in negative territory. Same applied to Africa stocks with Nairobi's All Share, Tunisia's Tony Dex and South Africa's JSE Africa Top 40 dipped, while Ghana Composite posted gains. Neka Oku, Business Express.
Thank you very much. That was Nneka. And this is where we end this edition of Business Express. We value your feedback, so keep the comments and observations coming. Be informed that previous episodes are on NTA's channel. Stay safe.